I have created a video with the intention of showing you how to scalp the US Open. When the US Open is a bit like that movie Gladiator where Russell Crowe, upon my signal, unleash hell. And when that bell rings, there's a lot of volatility, and with volatility comes opportunity. So this video is about how I scalp. I'll go through 4 points. First, I'll provide documentation that trading was done on a real account. That's important to me because I feel that if you are trading on a demo account, you are missing out on a vital element of trading education, and that is the emotional aspect. So it's very important for me to convey a degree of sincerity and integrity by showing that those trades are actually executed on a real account. Second point is I'll show you the trades that were executed through an initial overview. Then I'm going to show you the premise for the scalping, account size and margin used, and then I'll explain each of the trades that were executed. I think if you want to cheat, you can cheat. I have no intention of cheating. I think you're just cheating yourself if you do that. So I've taken a screenshot of my account. Obviously, I've robbed out my account number and my trading balance, but otherwise, this is what it looks like. This trade you're seeing here is the first of the scalps that I did. This is the second batch of scalps, and this is the third batch of scalps. Overall, I did about 20 scalps in a time period of around half an hour, and I made about £1,900. I've also downloaded the spreadsheet so you can see what it looks like with the entry time, with the exit time, and how much was made or lost, plus the overall aggregate profit loss. We'll start off with the first trade. That's the NASDAQ, which with this broker is called US Tech 100. The first trade is a resistance sell short trade. I short the NASDAQ against the overnight range. This is done on a 1 minute chart, and the chart doesn't truly capture what happened during those 60 seconds. The trades lasted just 20 seconds before I decided to close. The reason being I was in profit and I added to the position, but then both positions turned sour. One key aspect of my trading is the tendency to treat my trade entries as a sort of a personal pivot price level. I'll very often add to my positions if the first position has moved against me and then it moves in my favor. Here it would have worked had I waited 30 seconds, but my risk control comes before fortune telling, meaning I had no idea what would happen 30 seconds later. So what you're seeing here is the overnight range, and then you're seeing that I'm shorting right here at 11,913. You see that is the entry up here. The market actually moves against me. This trade is executed at 52 seconds past the open, and then what you're seeing here is me shorting against the overnight range top. The high was 11,913. At 19 seconds past the open, I execute a short signal at 11,913.9, and then about 11 seconds later, actually 14 seconds later, the market is moving my favor and I'm adding to my winning position, and then I'm holding it. The market is actually moving a little bit in my favor, and then it moves against me, and in approximately 20 seconds after my original entry, I take a loss of 10 odd points on each position. It's very important to realize that when you're scalping, that you don't mix time frames. It's so important that you have firmly ingrained in your mind that you are in there for a very short period of time, and you will not let a position move against you. If it moves against you by a parameter that you set yourself, in my case here was about 10-15 points, and I looked at the tape and I thought this isn't looking good, get out. Just get out and move on to the next one. Now that's a difficult thing. A lot of people can talk in glowing terms about their winners, but to be able to take a loss really quick really is paramount to your survival and your success as a trader. The second trade is a perfect setup, but unfortunately I entirely butchered up. My technical analysis and all my skill set as a trader is entirely driven by observation. That means that every night I will go over the charts, what happened during the day, and then I'll ask myself, how could I have made money today? I don't come up with elaborate ratios or sophisticated theories or intrinsic lines or anything like that. I don't use indicators. I don't use any kind of aid except for the raw price chart. I trade it as I would had I stood in an open outcry pit.
I constantly observe and write down the highs and the lows of all bars. This is the 5-minute bar, and then I take decisions accordingly. And one very important setup is depicted here and explained further on the next slide. And this is the setup. The setup is essentially on this bar here, with the moment the market trades above here, I sell short. Now you might be thinking, how did I know that the market was going to turn? I didn't. And that's so crucial that you accept and understand that I don't know anything that you know, or vice versa. What's important here is that you are playing the odds. And how often do I not see the market finish a 5-minute bar, and then the very next bar just manages to go a point or two or three above the high of the prior bar, after which it sells off. Or in times, in a bear trend, it just goes below the prior bar's low, after which it reverses back up. And part of my training is also training my eyes to see these things. That's why I constantly print out things, and I sit with them in a little notice board, and I notice where would I have bought, where would I have sold. But I also observe what the market is actually doing at any given point in time. And I also observe its tendencies and its behavioral traits. So what you're seeing here is that at 1 minute and 22 seconds after the open, I sell short the Nasdaq at 11,908. Now that comes in right here. Now this isn't a particularly good entry at all, because I should have sold it up here at 11,925, but I didn't. But I did observe the market come back down here again, and I thought this is a good place to sell short. Momentum is to the downside now. And then about 11 seconds later, I actually add to my position. So I'm already in profit on one, and now I add to the position, and I do that actually on a double up size, after which case I thought, geez, I'm just butchering this up. What I want to be truly transparent about is that I have had 2 really bad days, and the trading size that I have been trading with today has been about 1/10 of what I normally trade. That's because I lost quite a significant amount of money yesterday, and also the day before, and it has knocked my confidence ever so slightly. So I just wanted to get back to basic today and to see, hey, what did I do wrong yesterday and the day before? Is it time for a holiday? Is it time for a break? Or was I simply just being too aggressive? And that's one of my hallmarks, is that I'm an incredibly aggressive trader when the market goes in my favor. You will never ever see me add to a losing position, but you will see me add aggressively, and quite aggressively so, to my winning positions. And yesterday I had a 400% short position in the Nasdaq, and then decided to turn around and move back up again. Hey, it's just the market, and it's just money. But that doesn't mean that I will ignore a loss. I'm not proud of my exit here, not by any means. The profit is minimal. It could have been a lot better. But I will add to this trade in a moment, as you will see. The third trade is essentially a repeat of the second trade, and it's a very well executed trade. However, again, it's poorly managed. And as I just explained, my trading size today is the result of a significantly bad day and yesterday. Normally, my trading size is much bigger. I think for my ego's well-being, I want to show you that normally my trading size is much bigger. Here I have a short position in the FTSE, and every point is worth £2,200. And again, obviously this is not a demo account. Here I try another short position. Now the Nasdaq has moved up. What I wanted to show here is how much margin is required to trade £25 a point. And as you can see, I only am required to deposit £1,500. I'll talk to you in a moment about the broker that I use, because I think it's important that you realize that if you're trading with a broker that, say, has a 1-point spread in the FTSE, and I trade with a broker that has a spread of 0.4 in the FTSE, that means that your position has to move at least 1 point in your favor before you are at break even, while my position only has to move 0.14. So if you're trading the Dow Jones index with a 2.5 or 3-point spread, or if you're trading a variable spread where you never truly know if it's going to be 1 point you pay, or 1.5 or 2 or 2.5 if it gets really volatile, I want to trade with a broker that has fixed spreads that never change in hours. And To me, it's about trading with a broker, not the one that has the fanciest platform or the best news quote or the news feed, but the one that has the tightest spreads. Because every single time that I execute a trade, I actually pay that silent bid-ask commission, the difference between the bid and the ask. So say that you're trading the Dow 100 times a day and you're trading on a 2-point spread. Essentially, you will have lost 200 points before you are break even. And that's so important to remember, because if I'm trading 100 Dow trades in a day and I'm trading on a 1-point spread, well then I'm only 100 points behind whilst you are 200 points behind. That will add up over time. So what you're seeing here is the same tendency once more, again in the NASDAQ, selling short just above the prior bar's high. Now the way that I execute these trades is I simply just click the button the moment that I see this price level being available. So you're seeing me here execute a trade at 11,919. You see here that it actually went as high as 11,925. And that happens 1 minute and 9 seconds past. And then I will add to the trade at 2 minutes and 14 seconds past the open. And then unfortunately, I take some profit on one, but I decide to stop myself out on the other. And I basically just have a scratch trade. You might be sitting there thinking, this doesn't look entirely profitable. And that's right. I wanted you to show a side of trading that wasn't glorified. It isn't compounded massive gains or massive losses. This is just how I go about my business. I still end up making money during that 30 minutes, but I haven't filtered out the bad trades, because I think it's really important that you see what a bad trade looks like. But more importantly, you also see how quickly I cut a loss, because it's simply just not in my repertoire to hold on a loss. I know my time frame. I know I'm not going to hold on. When you're scalping, it is very quick in, but it's also very quick out if it's not working. I like to scalp the FTSE 100 index, and I traded with a broker called TD365.com because they have a lowest spread in the world and they are fixed. I can trade the FTSE at 0.4 bid ask and I pay no commission. I can also trade the Dow at 1 and the S&P 500 at 0.14. Now, when you think about that, it's almost absurd that a broker will offer it at 0.14 when the actual bid-ask spread in the underlying is 0.25. And that just goes to show how much competition there is amongst brokers to attract clients. And that's a good thing for us, because it means that we can trade at ridiculously low spreads. So to me, that makes it an ideal broker to scalp with, because many other brokers will offer variable spreads, which means you never quite know how big a spread you will pay. Now in this trade I'm about to show you, I will play the FTSE index on the short side based on the weakness in the Dow Jones index. And that makes for a very interesting trade, because essentially I'm watching the Dow Jones index, but because I can trade the FTSE index at such a low spread, I actually execute my thesis in the FTSE index, what I actually observe in the Dow Jones index. So what you're seeing here is an outline of the trades. This is the trade entry time and this is the trade exit time. And you'll also see how my trade size varies somewhat here. Some of the trades are 275 pounds a point, some of them are just 25 pounds a point. And overall, I have a big loss here that is more or less annulled by these two gains here. Then I have a pretty juicy one here, and then just break even on these two. Now let me show you the trade itself. So what you're seeing here is the FTSE index chart. This is the FTSE 1 minute. And again, you'll notice this trade setup right here. We see this bar here. And normally I will trade this on a 5-minute chart, but actually in this case, I'm executing on a 1 minute chart. I notice how the market goes above the prior bar's high and then turns around, and I begin to short down here. Ideally, it would have been shorted up here, but I didn't. I actually waited a little bit and I started shorting down here at 02, and then I added again at 99. Now let me show you how this signal actually came about. So what you're now seeing is the 1 minute chart of the Dow Jones index, but I have executed the weakness in the FTSE index. I notice the Dow making a double top high, and then it goes above the prior bar's high, and then it reverses back down again. And I start shorting down here. So you'll see here that I execute a trade at 31,293, and I actually managed to run that position a fair while to produce a £1,000 profit on a £25 position, which is about 40 points. And I also add to the position, and that is losing me. You can see how I added to the position much later, and I thought, I better get out. I don't think there's any more weakness in it. So I made on the first one, but I lost on the second one. So this is what it looks like down here. You'll also notice that I'm not in the trade very long. The entry is 31,293. That actually makes it about here. So that was a decent trade. The next trade, which is actually trade number 6. This was about as perfect an entry as you can imagine. The Dow high was 31,319, and I actually short at 31,313, and the Dow moves 60 points in my favor. Unfortunately, I only make 1 point. And that is an important point to highlight. That is that although I had a significant profit from a scalp point of view and how much I had risked on this trade, which was no more than about 25 points, I actually am thinking this could turn into a bigger trade that I wanted to add on. But instead, the market reversed back up and I lost all my profits. So all I got from it was a 1 point profit. But let me show you the actual trade. The high here is 31,317. And I short at 31,313 because I'm taking the bet that we have just seen the high. So it's a beautiful entry. I'm holding the position for about 6 minutes. The market moves all the way down here, and then it stops me out, and I just get a 1 point profit. Well, that's all I got time for now. If you have any questions for me, you're more than welcome to contact me on hello@tradertom.com. You take care of yourself now. Bye-bye.